Joining me now is the Secretary of Energy, Christopher Wright. Secretary, great to see you. Thanks so much for being here.
Great to be with you, Maria.
So what do you want to say about prices coming down right now? Do you expect that will take place, and how? Why would prices go further down? Tell us about your efforts.
Well, average gasoline prices today are well below $3, but this might be the first year they average below $3 in quite some time. But yeah, the oil supply continues to grow. Oil prices have continued to trend down. We're also making it easier to refine oil in the United States. We're trying to lower that part of the cost chain as well. But the president was elected to drive down energy prices. Gasoline prices, heating prices, electricity prices is a bigger challenge, but we're making big progress there. The huge rises you saw under President Biden, those will soon come to a stop.
Do you worry that when oil prices get to a certain level, below, $60 a barrel, $50 a barrel, that oil companies will pull back and not put the kind of long-term investments in place that you would want because they're not making the money that they were?
Yeah, U.S. American oil and gas companies have just been tremendous innovators. With the shale revolution, they've just changed the global energy situation. But there's always a balance. There's a market-driven price, and when price gets low, it strains their profitability. That also drives innovation. That drives efficiency. But I think that break-even price for them to produce will continue to come down. But short-term, prices move by markets. But I'm very confident in the American oil and gas sector to thrive in the long run.
The president just mentioned the first sale of the Venezuelan oil, that sanctioned oil. Walk us through the process here. So the United States is taking that oil in Venezuela after extracting Maduro out of the country and just, sold it for $500 billion in the first sale?
The first delivery of cash was $500 million. But yeah, it'll be several $billion this year. But, think of it before. It was just a quasi-criminal enterprise. Some of that revenue went to the government of Venezuela. Some was siphoned off and sold, by essentially gangsters or rival drug gangs. And then the oil was sold at a huge discount. China was buying this oil at $30 below Brent price. It was huge. It was a discount crude supply to China. Importing Iranian and Russian crude. They need to import light oil to produce their heavy oil. And they hosted Hezbollah. Think of that. Hezbollah's Western Hemisphere headquarters was in Venezuela. So today, that oil is coming out. It's all marketed by the United States government. We're getting market prices for it, quickly putting that money into accounts in the name of PDVSA and funneling cash to Venezuela. We're growing their revenues of their government, and we have significant influence over them to start to end the criminality, displace our adversaries, and bring a better society in Venezuela. But of course, it benefits the U.S. tremendously, both in lower energy prices, as you heard the president say, and reduced export of drugs and guns and crime to our country. We're cleaning the hemisphere up.
That's incredible. $500 million for the first sale. What are you expecting for further sales? You think it'll go up to what? You said a couple of $1 billion.
Yeah, well, no, we'll get several $1 billion this year, north of $5 billion this year.
President Trump arriving in Davos after some technical issues that he had on Air Force One, but he's set for a much anticipated speech this morning. Energy will be a big topic. He's told us, watch this.
Our objective is when we leave office, we're going to have 40% market share. So we've got Taiwan, right? 2 blocks of $250 billion, right? Their companies are going to come here, TSMC. We gave them credit for $100 billion. So they've got another 150 to go, right? Plus Taiwan's going to put $250 billion toward their small and mid-sized companies. So we bring the whole supply chain from Taiwan here, try to get up to 40% market share, right? And then for the rest, the CHIPS Act, which was small, we doubled its size. We basically spent no more money and doubled its size. We have Micron building $200 billion in America. So we are going to invest $1 trillion in semiconductors in America, get up to 40% market share, and at least be able to take care of ourselves. God forbid we need to.
We have the most successful country in the world. We have the hottest country anywhere in the world by far. And this country would have been absolutely stone cold dead. And I'm going to be talking about it. I'm going to be, because, a lot of them could use some of the advice as to what we did. They need energy. You take a look at their energy policy, they're going to destroy themselves with what they're doing with the windmills and all the nonsense. They need energy help badly, or they're going to be in big trouble.
The president there is talking about the Europeans, of course. And yesterday, Scott Bessent made the comment that the Europeans are still buying Russian oil.
Yeah, almost done with that, but still a little bit of natural gas from Russia is sold in Europe and oil is sold in Europe. I think the Europeans have resolved they need to end that. They realize they just built a decades-long dependence on a very unreliable and adversarial supplier. And as you also heard the president say, they also thought the age of hydrocarbons was going to be over in 10 or 20 or 30 years. There's just zero chance of that happening. And I think that return to reality is happening in Europe. They realize if they want to be part of AI, if they want to bring industry back to Europe, if they want to be militarily and economically strong, they got to get realistic about energy again.
No, it's interesting because for a long time we were talking about this competition for semiconductors and, of course, all this need for the right chips to build these data centers and AI. It's actually turned into a power race, an energy race, hasn't it?
It is. The biggest constraint right now in the speed of innovation of AI in the United States is the speed we can grow our electricity production. We've had surging oil and natural gas production, fantastic for America and the world, but we haven't had surging electricity production. We've had a more European climate-focused regulatory environment on our electricity grid that's ended up closing more plants than we've opened. This year, the Trump administration, through our Department of Energy, we stopped the closure of 17 gigawatts of coal capacity that was just going to be shut down. Think how cold it is in the East Coast right now. Do you want blackouts right now? Do you want continued rise in electricity prices? Just nonsense. But we are pivoting that direction exactly the opposite. We're not only going to stop closing reliable resources, we're going to, as rapidly as possible, expand the capacity of our grid so we can continue to lead in AI.
And real quick, how do you, while doing all of that, how do you ensure that electricity prices don't go too high for consumers?
Actually, building new capacity and expanding the demand for electricity is very helpful in keeping prices down. It's states like California that have invested huge amounts of money in closing plants, building wind farms and solar panels, and they've actually produced less electricity today than they did 5 or 10 years ago. That's the road to high prices. The road to low prices is increase the throughput on your existing infrastructure, electricity grid. That's how you get prices down.
Incredible. What a story. Secretary, thanks very much for all of your efforts. We appreciate you here today telling us about it.
Thanks for having me on this beautiful day here in Davos.
All right, Energy Secretary Christopher Wright. Stay with us. We'll be right back. We got a big hour ahead. You're watching Mornings with Maria, live on Fox Business from